Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Friday morning pre-market webcast. Okay, right up front, let me apologize for a few things. The audio is terrible. I'm on my backup microphone. I'm on my backup computer. Sorry about yesterday. My trading day started yesterday with the blue screen of death on my main computer. So after I sifted through all that, then we were able to get to the markets. The webcast wasn't possible, but we were able to get some pretty informative tweets out, and we had a really good day in the room. So that helped with what was a rough morning. So sorry about no webcast yesterday. I'll be totally back up and running on Monday. So where are we now? We are in day 4 of a lower band ride. We rejected highs on Friday, broke down below the middle band. Let me zoom in here. We reject highs Friday. We break down below the middle band on Monday. Closing below the middle band sets up the lower band ride. Tuesday, we hit it. Wednesday, we do what at the time in the room I called a bear market rally up to the middle band. Middle band there gets confirmed as resistance yesterday, and we essentially fail. So lower band, retest, middle band, and fail, and now we are trading, above and below the middle band, which is not unusual. So 4 days of a band ride. That's not what's important. What's important is the Bollinger Bandwidth here is 2.65. You would expect it to expand from 2.65 all the way out to 5 and above at the point where you can look for a meaningful, sustainable being the key, sustainable move back higher. So there's going to be bounces along the way, but those bounces are sells. Okay, just like Wednesday. Okay. What we did in the room, short 88, quarter. I covered half of it yesterday for 20 and 25 handles respectively. I still have that. I still have the rest on, and I'm just going to let it work. If we get another bounce day today, if we retrace, I'm looking at the 50-day exponential moving average here as a decent target up at 74. I would be looking then to go ahead and reload part of my short. I was long 61 overnight, but I got stopped out on the flush to the Europe low that retested the 58 area. If we get a little bit of a pullback to a higher low, I'd be looking to take a long, but that long is a pure rental, and that long is more of a way to track where the next rally is that needs to be sold. So we're in a band ride. I expect it to continue to act that way. The bears, for all their faults, the last 6 sessions since the Scotland vote Thursday night and the highs at 2014 have been behaving very well, far better than the bulls. And Wednesday was an opportunity for the bulls to just turn it back like they did here, but they didn't get it done. So now it's advantage bears. The Russell remains incredibly weak. The Russell, I never show you guys other charts, but I'm going to do it today because there's a interesting correlation between what's happening in the ES and what's happening in the Russell. Okay, now you got the Russell. It came up to the upper band. It failed. It broke below and started its own lower band ride here. It came back up, failed at middle band, kind of what like ES did on Wednesday. Then it broke down and below a key moving average. This is the 200-day exponential moving average, and now after its failed rally on Wednesday has confirmed the 200-day exponential moving average as resistance. So for the first time in a long time, you really have a real opportunity to seal a key long-term mean reversion type of moving average as resistance. Now, it's had other chances. Had a chance in May, blew it. Had a chance in early August and blew it. So can they blow this? Absolutely. But this is what the chart is showing me right now. So how does that correlate to what's going on in the mini? And I know this one's going to be a little bit long today, but you guys didn't get anything yesterday. So fail at the upper band. Break back below, break back below, test the middle band and fail. Break below a key moving average. And the 50, you've got to understand, the 50 had been support here before the late May upper band ride, support at 5 different occasions, and has been a problem for the bears all along the way. So converting the 50 to resistance, which they would have an opportunity to do today on a pop to 74 that failed, would indicate to me that the Russell has converted the 200, the ES has converted the 50, and now we can start to look at what becomes magnetized for, kind of a true correction lower. I have been accused at various stages of being perma, you name it. This year and in 2013, I was accused of being a perma bull, and because dip buying worked. What I'm telling you now is not to be a full-blown bear, but to recognize that there are things happening underneath the surface of the market for the first time in years that indicate there may be an actual trend change. Not a hopeful trend change, but an actual trend change. I think this is going to play out slowly, but these are little clues to look at along the way, and that all starts with how do the bulls and the bears react today, especially on a move up to the 50 there at 74. All right, everybody have a fantastic day. Have a great weekend. Check out the website, PrincetonTrader.com. Follow us on Twitter at PrincetonTrader. Come check out the chat room. We posted a lot of excerpts. I always post excerpts of what I'm doing trade-wise. Yesterday I decided to post a few of what our members are doing because I think that's way more important with what they're able to do with the room than what we're able to do with the room. So check out the timeline, and most importantly, come check out the room for a couple of weeks and see if what we're doing speaks to you. All right, take care. I'll be back with another webcast Monday morning. Trade 'em well, everybody.